Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
And welcome to the Global View on this Monday. Good to have you with us here. Let's check the macro picture, and we can take a look further evidence that the Fed's monetary tightening campaign is having the intended effect. US personal consumption expenditure is showing cooler than expected inflation in May. Consumer spending decelerated sharply. Spending on an annual basis fell to 4.6%, down just below 4.7%, which was expected, with outlays on goods falling 0.5% for the month. And spending on motor vehicles and fuel tumbling more than 23% in May. Personal income rising 0.4% last month, with wages increasing 0.5%. US Treasury yields pretty flat on that data, the 2-year at 4.87% and the 10-year down just a tad to 3.81%. And futures showing the Fed's key borrowing rate will stay above 5% through to May next year on expectations rates will stay higher for longer. Inflation in the Eurozone, meanwhile, fell for a third straight month in June. The reading there, preliminary reading, showing it was unlikely to sway the European Central Bank, which has penciled in a 9th consecutive rate hike for July. All right, well, let's take a closer look at housing in the States. In fact, we've just had some figures out locally saying housing prices continue to rise here in Australia in all major capitals except Hobart. Well, Anthony Doyle joining us from Firetrail to talk us through 3 global companies set to benefit from that resilient US housing market. Anthony, good to see you.
Morning, Andrew. How's things?
Good. Just before we get to that, of course, we're sort of looking at where we've been for the first half of the year, stateside, with those stock performance. Clearly, AI was the big trend there. It was a boost for many, particularly the Nasdaq, which the biggest rise there on record.
That's right. Yeah. So really extraordinary to think that ChatGPT really set a rocket under those 7 stocks, those mega cap growth names. And investors obviously very, very quick to try and identify who the winners would be from the continuation of the AI revolution. So the rise in markets this year, the S&P 500, the Nasdaq, extraordinarily unhealthy in terms of the breadth of the increase. And obviously the mega cap names were hit hardest in the second half of last year. There's been a mean reversion there, and certainly there's a lot in the price already. So going forward, we expect that the increase in markets that we're likely to continue to see for the remainder of the year, that breadth of increase, that will broaden out outside of those big mega cap growth names.
All right, so therefore, you're happy with your exposure in the States?
Yeah, we're very happy. I mean, we own Microsoft, Alphabet, TSMC, Micron. So we build portfolios of global growth and value companies. It's extraordinarily difficult to position one way or the other in terms of factor or style biases. So we think that building a solid portfolio of high conviction concentrated names with a bit of exposure to everything is really the best way to outperform the market over the medium to long term.
All right, so happy with your exposure, particularly in tech. Interestingly though, and we're going to focus this talk on housing in the States, what are we seeing there at the moment? I've just mentioned the figures we had here locally, which showing we've certainly bounced off the lows despite further rate hikes to come. It's all about resilience. Is that what we're seeing in the States as well?
Yeah, Andrew. So as I mentioned, diversifying your assets, diversifying your exposure in equity markets can be extremely beneficial. So everyone's talking about those mega cap growth AI beneficiaries. Less well known is the US Home Builder Index is up 26% this year. And if I told you, and if we had perfect insight into Fed rate hikes that began over 18 months ago, I'm sure that many would be sitting in my chair right now saying 5% increase in interest rates, the housing market is going to tank. So what's going on? Well, the market hasn't actually adjusted in terms of buyers and sellers to much higher rates. So the US 30-year fixed mortgage rate now has punched through 7%, and it's happened so fast that sellers don't want to sell their homes because they don't want to refinance at a much higher mortgage rate, and buyers are locked out of the market because their borrowing capacity has collapsed and they don't want to lock in a 7% mortgage rate either. So what has actually happened as a result of interest rate hikes is not that the housing market has collapsed or that prices have collapsed, but supply has collapsed. And so those that want to enter into the market, we have a huge cohort of millennials now that are beginning to have families and want to enter into the market, will actually, they have to have cash, which is extraordinarily difficult to do, or they're buying new homes. So home builders, these big listed home builders, are actually taking market share off the smaller companies because the smaller companies are finding it difficult to obtain finance for projects.
All right, so given that then, let's take a look at the opportunities there, and you've come up with 3 stocks.
Yeah, so in terms of the attribution on our portfolio, the Firetrail S3 Global Opportunities Fund for the month of June, it was the US housing market exposure that were the strongest contributors to our outperformance over MSCI World in June. And so 3 stocks, for example, diversified again by sector. One is Weyerhaeuser, a timber REIT, which I've mentioned on ausbiz before, a company that obviously has a huge amount of assets in terms of the forests that they own. They cut some of those forests down to provide lumber and timber. So with people staying in their homes and not buying or upgrading to a new home, they're undertaking renovations instead. So Weyerhaeuser as a lumber and timber company are benefiting in that sense. Another company in the portfolio that's benefited is a company Hong Kong listed Techtronic. And so I'm sure that many Aussies have been to Bunnings. They've gone and bought Ryobi tools, and the ecosystem of Ryobi and Milwaukee tools, once you buy one with the battery pack, you inevitably are incentivized to continue to buy in the same brand. And actually Techtronic, the market leader in the US in power tools, and particularly given the electrification of power tools rather than petrol, they own the Milwaukee, Ryobi and Hoover brands. So again, another beneficiary of a stronger housing market. And finally, in terms of the US, we've got Techtronic, we've got Weyerhaeuser, but in terms of the US housing market, the other beneficiaries include, of course, the US home builders as well.
All right, you've also thrown in CARR there.
So CARR is a HVAC manufacturer, heating, ventilation and air conditioning. So as I mentioned, existing stock of dwellings in the US it's a similar scenario to Australia. There's a chronic undersupply given household formation. So there's a focus on new builds. And of course, when you are building a house, normally one of the first things you do is install the air conditioning unit or the heat pump. Particularly given in terms of the US Inflation Reduction Act, it's no longer a case where radiators are being inputted into new housing stock because of their heavy level of carbon emissions. So CARR, as a leader in heating, ventilation and air conditioning, is benefiting from a stronger new building housing market than what many had previously expected. And they have this regulatory tailwind from the US Inflation Reduction Act. And of course, with high energy prices, installing a new air conditioning unit, 30% more energy efficient.
Yeah, we're seeing much the same here, aren't we? Particularly encouraged, it's the electrification process, isn't it? We get away from gas and electrify the home. So we're seeing that in the States. Anthony, some really good ideas right there. Thanks so much for joining us on Firetrail.
Cheers, Andrew.
All right, that is the global view for this Monday. Stay with us. The Open is just around the corner. Taking a look at SPI futures, up around 0.4%. We are expecting a positive open. Stay with us.